morning, everybody, and thank you for joining the retirement recap for Thursday, April 16th. With me, Rob Milas, our Chief Investment Officer, and Mark Salamone, our lead consultant. Rob, we're in Boston. It's April. It's snowing. You're all things market, but humor me and be a weatherman. What's going on today?
I don't know what to forecast at this point, but boy, yesterday was lots of red. So the S&P 500 retraced 63 points, while the small cap indices, the Russell 2000, fell back 4.3%. And the market was really reacting to the massive decline in U.S. retail sales and poor manufacturing output numbers. So today, the U.S. Labor Department will release its weekly jobless loss claims, and analysts are expecting another 5.5 million Americans will have filed for benefits. Just, a horrendous number. The cumulative expected number will eventually reach about 25 million, and that's expected in the next few weeks. And then finally, we had the longer dated U.S. Treasuries exhibiting strength, as you would expect, with a negative economic data. So the 2-year yield declined 2 points to 0.2%, and the 10-year yield declined 11 basis points to 0.64%, yielding the flattening the yield curve overall.
And hopefully better things in the markets today. Thanks so much. So we're talking a lot about stimulus platforms. Where's the money going is a question that we're seeing being kicked around a lot. So in terms of where the distribution of the $2 trillion is going, a large part of it is going to individuals with the stimulus checks, and more on stimulus checks in a moment. The next biggest chunk is actually going to large corporations, about $500 billion. Underneath that is $377 billion going to small businesses, which is a little concerning. So roughly half of Americans work for small businesses, and these small businesses do not have the deep pockets and resources that the large corporations do. So the Paycheck Protection Plan that we've talked about a bunch on these retirement recaps is working, but not really to the extent that it's working for the big corporations and the bailout that they're getting. Also, the PPP program, it really isn't working in the sense that these small businesses have received their stimulus checks and loans yet either. So hopefully there'll be more stimulus for small businesses. We service small businesses. We can see and we hear that they really need some help. So hopefully there's more help on the way because in my opinion, it's desperately needed. So the CARES Act protected the stimulus checks that folks are getting from creditors from the federal and from the state government. So that was written into the CARES Act. In other words, if you owed money to the federal or state government, your check wouldn't be siphoned or taken away from you. However, many states did not think to create legislation that private creditors wouldn't be able to reach and grab that stimulus check. So certain states, such as Massachusetts, where we are, another Texas, where we have a lot of clients, wrote legislation saying your stimulus check couldn't be attacked by creditors, but many others haven't. So unfortunately, a lot of the stimulus checks that are coming in electronically are being taken by creditors. Now, a protection from that is getting your paper check, which is good, but as we talked about yesterday with Nicole, those paper checks may not even get to you until the end of May in some cases. So some good news and some bad news there. I'm going to turn it over to Mark. He has some more information that he'd like to share as well.
Thanks, Rich. Yeah, there's some interesting data on how companies are dealing with the economy being shut down and how different companies are trying to defer expenses, save money, and improve their cash flow. So larger companies have actually been found more often to be suspending their employer match. So one of the benefits of 401k plans and any retirement plan is that hopefully your employer can participate and provide a match. And in this case, a lot of times when we've had recessions in the past, that's typically one of the first things to be either suspended or adjusted. And that's been the case for large companies, but not so much for smaller companies. So the percentages here, more than 20% of large plan sponsors, those of more than 5,000 participants, have indicated they're suspending their match compared to only 3.6% of small plan sponsors. In the next paragraph on this slide, you'll see how they're dealing with the CARES Act. Again, there's a differential of opinion when it comes to the size of the company. Most large organizations are allowing distributions versus only 20% of the small companies. And again, when I refer to the CARES Act, we're talking about those expanded limits on distributions and loans. And as you can see, also when it comes to loans, only about half of the large employers are making them available compared to only 17% of the small employers. So different opinions on how to deal with the CARES Act, providing relief and liquidity for their participants, and also how they're dealing with saving expenses and dealing with the employer match. So interesting statistics, and hopefully some of these will improve over time.
So another way to say that, Mark, the big companies who are getting over $100 billion more of bailout money are the ones that are stopping their matches. Yet the small businesses who don't have the deep resources, getting $100 and whatever it is, $50 billion less, are keeping their retirement matches intact for their plan participants, right?
I thought you might hit on that, and that's correct. Yeah, I mean, that's unfortunately the what's happening right now. It seems the smaller employers are making an effort to continue to keep those benefits there and try to help their employees, and the larger companies are making it come a little quicker, even though they are having access to that deeper reservoir of money. So that's reality right now.
All right, just saying, that's the reality right now. So thanks so much, everybody, for tuning in. We will see you tomorrow for our Friday recap. Thanks so much.